Welcome to Finance Unlocked for Nonprofits. In this section, we're going to talk about oversight. Now, Aaron, I've heard a few things before, and I've seen some news reports that talk about nonprofits getting into a lot of trouble. As a board member, that's bad, isn't it?
That is bad. That's something
what
we want to try to avoid for all the organizations that we work with. And oversight is just really crucial to avoid that kind of exposure for your organization. And to that end, the board is ultimately responsible for the internal controls of the organization.
Okay, so like the board, in other words, are kind of setting out the rules of the household.
That's right.
That we all operate with underneath.
Yeah,
okay.
That's what internal controls really are. The rules that we operate to protect our assets and to make sure that the financial reports that we're reviewing are reliable.
Okay. So in other words, in the rules of the household here, we've got various things and each person's got their different job and we sort of do those rules. Like in other words, no cookies before 5 o'clock. Right? That's our rule, and we adhere to it.
That's right, and it's important that those rules be written. So whether for a small organization, it's just a short bullet point list. For a more complicated organization, maybe it's much more than that, but just making sure that those are written someplace so that we can keep referring to them and know what rules we're supposed to be following.
So it should be like posted right on the fridge so everybody can see it.
Exactly right.
Okay, good. Just need to make sure. Now also on this, then, those rules are what's keeping us all sort of in line, right? Like, who can get to the cookie jar?
Exactly. So access is crucial to this. So limiting the access that people have to our assets. So who can write checks? Who can use our credit cards and our debit cards? Who can touch the cash and the checks that are coming into our organization? So really limiting access as much as we can, again, to protect ourselves.
Okay, but Erin, we've had the same woman bookkeeping for us for the last 25 years, and she's so trustworthy.
Of course she is. Trust is not an internal control. So we in the nonprofit sector are very trusting. We work with a fabulous group of people, but some people say trust but verify. So it's still really important to have these rules and to hold people accountable for these rules and to take the access away where somebody simply really does not need it.
Got it. So in other words, we give mom access to the cookie jar because dad, sometimes might take 2 or 3 cookies, right?
That is possible.
Exactly. So, okay, so that's the way that works.
Yep. And so thinking about limiting access to both assets and systems are important. So when you think about a nonprofit, who can get into the accounting system? Who can get into the payroll system? So thinking about that as well.
Okay. Because you're not going to want to give, the youngest child access to the cookie jar.
Right.
Okay.
Yes.
I understand.
So the other thing to think about is this idea of segregation of duties, which I think is a phrase most of us have heard before. And it's really separating 3 things. Access that we've already talked about, the authorization or approval of things, and the ability to enter things into our systems. So keeping those 3 things separate.
Kind of keeping a check and balance. Like in other words, I need to have mom say, yes, you can have cookies, and I need to have dad say, yes, you can have cookies before we can have cookies.
Right, and checks and balances is exactly the right way to think about this. In a nonprofit, it might be, we spend over $500, we have to get a certain approval or take something to the board, that kind of thing.
Okay. So we've got our rules of the household here. And we want to make sure that something really bad doesn't happen, because if that does, that's going to be our name in the newspaper. And that's bad as a board member.
Yep.
Okay.
Yep. So I think constant awareness of the rules, so revisiting the rules, revisiting your policies and procedures and thinking about them each year. Brainstorming risks. New things happen in our organizations. We have new risks, new things we need to think about. So having that kind of a conversation at the board level each year. And thinking about doing some spot checks, some mini audits, if you will, just to make sure that things are still happening the way that we think that they're happening and that we're following our own rules.
Okay. So we'll list those rules. We'll just embroider them on a pillow and put it right out there. Does that work?
That's right.
Okay, that works. Because most importantly, we want to make sure that we have enough cookies for everyone. Cookies are important.
Cookies are important.
To me.